Good afternoon, everyone, and warm welcome in the cold afternoon. Some members send me the messages that still they are on the way to join. So before that, let me give you a brief introduction about Majlis. This is the 12th Majlis. We have completed 11 Majlises before. Right from since last 1 year, monthly Majlis we were doing. We took the break in the summer vacation, and then we were doing some physical seminar through the other institution. And now we started with the 12th Majlis. We have somewhere around 100 members already. They are the part of the Majlis WhatsApp group where we are discussing corporate tax friendly measures. So basically the concept of the Majlis is to meet the like-minded people from the tax domain to discuss on the critical aspect and where the further clarification required. So there are many tax consultant, tax expert, transfer pricing expert. When we talk about corporation tax, it includes the transfer pricing as well. Since Article 34, 35 and 36, as well as Article 55 is very much part of the corporate tax law. Basically, it's a corporation tax. Since this law is also applicable to the natural person like you and me, if we are undertaking any business or business activities. So the purpose of this Majlis was to have a meeting with the like-minded people to discuss and deliberate on the subjects. So eventually we are planning to have a proper conventional Majlis form whereby even the attendees will allowed to speak on some of the subject. And once the law established, then maybe a physical Majlis where one can have a black tea and discuss on some of the aspect. So this was the purpose and objective to create the Majlis. Here we will be having a limited member, not like other institution where many of you guys know that I was a part of the taxation society where we have a more than 1,000 paid member plus more than 2,000 connection where I was in the managing committee as well as handling all the WhatsApp and queries. But that's the larger group whereby all the people are allowed to join. Whereas Majlis group is created only for the expert and people from the tax domain. So eventually we'll be meeting same like how we meet in the Majlis to discuss some of the provisions. So please join the WhatsApp group. We have somewhere around 100 members already. If you are not part of the WhatsApp group, I have shared the link in chat box. You can join or you can send us a request. We will be adding you because eventually we'll be sharing the recording, PPT, everything in the Majlis WhatsApp link. So this is the concept of the Majlis. Now we can move for the today's agenda. Today's Majlis is solely for the purpose of the walking through the different parts of the corporate tax return. As we all know that recently in the month of November, FTA has come up with the tax return guide. Now this guide is step-by-step guide to file the corporate tax return, which run into the 176 pages. In fact, we were of the view about the corporate tax return. For some of the messages are sending, some of the attendees are sending message for the introduction, though mostly we avoid to do the introduction in the Majlis since almost all people are known. But for the sake of the new member, let me, okay, I'm admitting our person. Okay. So for the sake of the new member, I'm Nishant Rayma, chartered accountant. I'm here since last 17 years, 4 years with the Big Four consultancy firms. Last, I was with the Big Ten firm, established the corporate tax division. Now, I'm running the RCA tax consulting, solely focus on the UAE taxation. So at present, we are doing a corporate tax, transfer pricing, tax treaty. I am a speaker on the various forum on the tax treaties as well. And we are doing value-added taxes. So this is the brief introduction about me. Going back to the today's agenda, we have a full-packed agenda to walk through the corporate tax return, which is our today's discussion will be totally based on the corporate tax guide on the tax return issued by the FTA in the month of November. So there may be some gap between information what you experienced while filing the return on 31st December 2024 and what we discuss now. As we know that this corporate tax return is fully based on what information you selected, what options you selected. So what we did, rather than going by a strict format of the corporate tax return, we will be taking the help of the corporate tax guide and walking through the every part. So let's start. Since we have a full pack agenda, since it is a Majlis, we are planning to cover all the parts. But if some of our permanent member requested to conclude within a 1 hour, so if some parts remain, then we will be continue from the next Friday. So total of the 8 parts. First is the overview of the corporate tax return, totally 3 slides. This is not a 5, but it should be a taxable person information, 6 to 11, 5. Then you need to make a certain election, which will run into the 3 slides, accounting schedules, accounting adjustment and exempt income, relief, other adjustment, tax liability and tax credit, review and declaration. Very important. Before submitting the return, you have to review all the information provided along with the return, declare the correctness before submission. And then schedules, as many as 20 schedules for every aspect, every significant aspect of the corporate tax law, you have a separate schedule. And last, transfer pricing disclosure form. So without wasting much, let's start with the first part. Before that, let's walk through the timeline. As we know, law was enacted on 9th December 22, become a history, whereas GARS were Article 50, which provides general anti-abuse rules, was applicable from the October 2022, become a history. Effective from 1st June 2023, again it become a history. Registration almost become a history because all the existing businesses are registered. Whosoever is not yet registered had to pay the penalty because the last deadline was 31st December 2024. For the new businesses, when the license issued after the 1st March 2024, then you got a 3 months. So any existing businesses up to the 1st March, there was a separate deadline through the public clarification number 1 up to 31st December. So still, if you have not registered, please make sure that you register for the corporate tax. Without registration, you cannot file the corporate tax return. Then once here we have a tax period. So irrespective when you register, return filing liability is 9 months from the end of tax period. So what is the tax period? Tax period can be different than 12 months. Yes, only first tax period can be either 6 to 18 months. Otherwise, subsequent all the tax period need to be 12 months. It is not necessary that you have to select January to December. You can have any up to 12 months tax period. So within 9 months from the end of tax period, you have to file the corporate tax return. Before filing the corporate tax return, make sure you calculated tax liability, you paid the tax liability. So let's see key attributes. City registration tax return mandatory for all taxable person. Now, this question also frequently asked since last 2 years, that we have a dormant company, we have a company, no business. Registration is must, and whosoever has registered for the corporate tax return filing must. Whether you file nil return, you file under the small business relief, you file as a offshore, you file as a non-resident, return filing is must. So once you did the registration, now registration requirement, there is separate lectures. You can visit our YouTube, Nishant Rayma. If you put a C in Nishant Rayma in the YouTube, we have extended Majlis on the registration, who also ever will require to register. So once you register, then return filing is must. Before filing the return, you must have a computation of your total income, taxable income, and tax liability. Corporate tax return will be on a Emirate tax portal online. It means you will not require to submit anything physical. Everything will be online. All the document, financial statements, schedules, everything will be online in a very user-friendly manner. And portal is very dynamic. Dynamic in the sense that once you touch the certain option, then only the information will be populated. Suppose you are not a free zone, you will not opted for the free zone, or if you are not opted for the small business relief, then information related to the same will not be populated. Now, this poses a one challenge, that if you miss to opt for any particular information, then related to that information will not be populated. Same thing in while doing the election. If you will not be selecting or electing a particular election, then all the information related to that election will not be populated. So, who all will require to file the return? A taxable person himself can file the return, or tax agent can file the return, or any authorized consultant. So, to file the return, you will not require FTA authorized tax agent. Any taxable person, you yourself, as a businessman, as a consultant, you can file. If you are a consultant, you should have an authority to file the return by way of a POA or engagement letter. By partner in case of the unincorporated partnership. Lot have spoke about unincorporated partnership, but we know that it is not a separate entity, so partners are liable to file the corporate tax return. In case of the tax group, parent company will be liable to file the corporate tax return. So what documents required? But obvious, financial statement, because without income statement, you cannot calculate the taxable income and tax liability. Audited financial statement. Please, this point need to be noted carefully, that only in two cases, If your revenue is more than 50 million, then you're required to conduct a audit of your financial statement. Or you are going for a qualified free zone person. Only in these two situations, under the corporate tax, audit is mandatory. It means you can have an in-house financial statement, that is fine, as long as your revenue is not crossing 50 million. Even if you are a free zone person and you are not opting for a qualified free zone person eligible for the 0%, it means you are ready to pay 9%. Again, you will not require to get your books of account audited. It means it is a in-house financial statement for all the SMEs, small and medium enterprises. Tax payment challan, valuation report. Valuation report required for a first tax period wherever you have a certain properties. Tax residency certificates. As we know that Article 11 provide for a tax residency, whether you are a resident or non-resident, accordingly, you have to submit the documents. Foreign tax credit, if you are planning to take any credit for the taxes paid outside the UAE, then you have to submit foreign tax credit certificate, transfer pricing document. As we know that if your turnover, your revenue is more than 200 million, then you have to prepare and file master file, local file. Otherwise, transfer pricing disclosure form will be required to be filed. We have a separate 2 hours lecture on the transfer pricing. We have posted entire 2 hours lecture on our YouTube. Certain lectures and certain session will not be available on a YouTube until unless you subscribe. So make sure you subscribe to YouTube channel to watch entire sessions. It will be a self-assessment process. Again, you will not walk into the FTA office to submit. It will be fully self-assessment process through the Emira portal. Here we go. So this is the first when you log in, start your corporate tax return. You can see the 8 part. Part number 1, taxpayer detail. We have highlighted those part. Some of the people maybe it's not legible, but we try our level best to post and take the screenshot in a way so that you can read. Otherwise, don't worry, in a subsequent slide, we have discussed and deliberated on every aspect. So tax, first is the tax payer detail, second free zone detail, third is the elections like a small business relief, accounting schedules, accounting adjustment and exempt income, other adjustment, tax liability and tax credit, review and declaration. This is the entire journey of the corporate tax. And this is the agenda which we will be covering during today and next Friday Majlises. So let's jump to the first part, part A, taxable person information. So once you click the taxpayer detail, this is what the screen open on the Emira portal. Now this will give an opportunity to those consultants who has not filed any corporate tax return. This will give you a bird's eye view that what is there in the corporate tax return. So it will be a very user friendly. It will be maximum information will be populated, asking you the questions, asking you to submit a document related to the information provided by you. So here you can see the first part. In part first, taxpayers detail, address detail, taxable person information. Now this will be pre-populated information. Part A will be mostly pre-populated based on the information submitted at the time of registration of the business. So first, tax person's name in English and Arabic, pre-populated. You don't have to do anything. But of course, you have to see whether is there any changes. Sometimes what happened that after registration, if you have changed the name or any other amendment made in the name, also the Arabic name is coming properly, you have to check that. Then TRN number, address, all the address, uh, city, country code, landline number, mobile number, email ID, PO box. Mobile number and email ID very important because all the communication you will be receiving on the email, and many a time you will get a lot of information through the SMS. So make sure you have submitted the valid mobile number and email ID. Then tax period. As in the beginning we spoke about the tax period, you have already selected tax period while doing the registration. Then primary business, what business you are into, type of taxable person. Now this is very important. We have experienced that many people at the time of doing the registration for the VAT, they have selected the resident person as a type of taxable person for our foreign branches, for certain foreign businesses. Now, while doing the registration for corporate tax, those information were pre-populated and it was not allowing to change. So they continue with the same. Please remember, corporate tax provide two residential status, resident and non-resident. Certain non-resident is liable to register under the corporate tax and file the return. Like if non-resident has a P permanent establishment in UAE, non-resident person become a resident by virtue of Article 11, place of effective management. If those businesses are getting managed from the UAE, so this aspect is very important. If while doing the VAT registration, if you have filled this as a resident and if you are a non-resident, you have to go back to your portal, change the status. But this will not stop you filing the return. You can go ahead and file the return. But then subsequently you have to rectify the same. Not one. Review information and confirm or amend on the profile subject to approval. Now, whatever amendment you have made on the profile, on the portal, it will be subject to the FT approval. Note number 2, relevant section will appear based on pre-populated information. So this is very important. This is what challenge we were talking about at the beginning, that if you have not selected or certain information is not getting populated or wrong information were fed to the at the time of VAT registration or corporate tax registration, then maybe going forward in the subsequent parts, wrong information may getting populated. Now, in addition to the what we saw, pre-populated information, certain additional information also required to be filled in the corporate tax return. We have divided the same by way of category of persons. So first category of person is natural person. As we know, this is not a corporate tax, but it is the business tax. This is the business tax. This is the corporation tax. So it is also applicable to the natural person so long as such person is undertaking the business or business activities. So corporate tax is applicable only if you are indulge into the business or business activity. Now, in case of natural person, what other information required? In addition to the pre-populated information. One is a business activity, details, and turnover. Why turnover? As we know, natural person is exempted from the corporate tax if your turnover is 1 million or less. Basis of preparation of financial statement. Again, if you are preparing your financial statement by cash method, then different kind of windows will open on your corporate tax return. Then residential status, we talk about the residential status. If you are filling or if you are a non-resident liable to file the corporate tax return, then you may require to give the detail about double tax avoidance agreement, whether your country of resident has any tax treaty with the UAE. As we know that we have almost 142, we have tax treaty with more than 142 countries. And we have a tax treaty since last 30 years or more than 30 years. Then the natural person partners in unincorporated partnership. You need to make the disclosure. What is unincorporated partnerships? We have a separate session on the same. Is association of person where there is no any deed agreement. It's an association of person. Person came and conduct a business. Those businesses has liability to file the return either as a legal entity or in the hand of the partners. Second, juridical person. Now, whatever information we said in 1, 2, 3, 4 in case of the natural person, same information required in case of the juridical person. In addition to that, so detail as mentioned in point number 1 to 4 under the caption of natural person, and so certain more information required. What is that? The question will come once you will select the juridical person. That question will come: are you a part of the MNE, multinational enterprise? As you know, recently Ministry of Finance has announced a pillar two, whereby certain multinationals are liable to pay the corporate tax at a rate of 15%. By way of the amendment number 60, we already added the part of the top-up tax. So if you are a part of the MNE, again it will ask for your turnover. If it is more than 750 euro, then you will have a different information to be provided, different rates will be applicable. Now this selection is very important because once you have selected particular aspect, and the subsequently all the parts will flow aligned to that particular selection. Here you may require to give the information if you are a place, your place of effective management is situated in the UAE. So once you say yes, I am a poem business, then certain different kind of information required compared to the business established in the UAE. If non-resident, as we know that non-resident is required to file the corporate tax return in case of P, and if you have any nexus through the immovable properties. If you select that, then a different kind of information will be populated in the subsequent sections. Now, the third most discussed, deliberated aspect, free zone person. We have a separate schedule on the same. So what other information required? You are a juridical person, but you are a free zone person. Then first thing, confirm whether taxable person incorporated, established, or otherwise registered in the free zone. First, you have to confirm whether your business is within one of the recognized free zone by the Federal Tax Authority. We know there's somewhere around 50 plus free zone in the UAE. Out of this, 22 is designated zone. But here they are not asking about a designated zone, which concept is only relevant for the corporate tax for distribution activities. We have a separate sessions, not one session, many sessions on the free zone, and subsequently also we are planning to take the sessions on the free zone person. Second, whether entity has elected to be subject to 9% tax rate. Now here we want to clarify that all free zone businesses by default are qualified free zone person. It means by default you are eligible for the 0% corporate tax. You are a business which is located in a free zone. By default you are qualified free zone person, subject to the 9%, subject to 0%. Now here corporate tax return will ask you whether you want to elect for the 9%, means you want to go as a regular SSC. If you select, then different kind of information will populate. Now the question, why I am a by default qualifying free zone person? The assumption is simple, that you are rightfully in the free zone. Means you are in free zone. So we know that what is the qualified free zone person? If you are satisfying the conditions of Article 18, 5 condition plus 2. Out of this 7 conditions, 2 conditions very important. One, substance, adequate substance requirement, and 2, you are undertaking qualifying activities as described in the Ministerial Decision 263. 13 activities plus 1. So if you are a free zone person, you satisfy the 7 condition of Article 18, 5 plus 2, and you are undertaking or you are receiving the qualified income, then you are eligible for the 9%. So in fact, free zone businesses are supposed to have these conditions by default satisfied. So it means free zone businesses are not supposed to be a paper company, had to have adequate substance. If you are in a free zone, you are supposed to undertake only qualifying activities. Otherwise, ideally your business should be on a mainland. That is why if you are in a business, your business is in a free zone, by default you are a qualified free zone person. As tax authority assume that you have a adequate substance and you are undertaking a qualifying activities, a activity which is suitable for the free zone person. If you are in free zone by mistake, then you have to pay 9% corporate tax. So your activity is not aligned with the free zone, or now they come up with the 13 activity plus 1. If you are not undertaking those activity, then you have to pay the 9% corporate tax. We'll be discussing more on this. We have a separate schedule. Now here there is a separate schedule which will ask you whether are you satisfied, your business is satisfied all the conditions of the Article 15. You have to demonstrate by way of the documentary evidence. Last, now we saw natural person, juridical person, and free zone person. There are 2 more categories where person can file return not as a natural person, juridical person, or free zone person, as a parent company. When you form the tax group, then the parent is liable to file the return for the entire group. Or, as we said, you are unincorporated partnership, but you want to file the return as a legal entity or family foundation. So what information required? All the time, information as mentioned in 1, 2, 3. because fourth one, where partner has elected to file the return as a natural person will not require information. So 1, 2, 3, as mentioned in under the natural person caption, plus the question will pop up, same like juridical person. Are you a part of M&E? So this is the category of person where you will require to provide additional information in addition to what information you provided at the time of registration, which is pre-populated. So this is the free zone screenshot. It may not be quite readable, but we try to highlight. You can see the free zone data. I can read for you guys. Then non-qualifying revenue, then de minimis calculation, then substance requirement, then free zone confirmation. So here we can discuss or touch upon all those aspects which we just read on the EMERA portal. Revenue schedule. Free zone person to provide detail of the revenue from below 1 to 3 for de minimis calculation. Why you require to provide information? So that as we know that businesses are allowed to conduct business outside the purview of the qualifying activity to the extent of 5%. So as long as your income from such activities up to 5%, still you are eligible to get a 0% corporate tax. Now one need to provide the adequate information by way of the corporate tax return to calculate de minimis 5%. So what information required? 1.1 domestic or foreign P, whether you are a domestic, if your business is in free zone and you have an entity outside free zone, those income required to be disclosed separately. Or if you are a foreign P, then the immovable property in free zone, then the IP. Now this all has a certain conditions under the free zone businesses. Will not go into the deep, otherwise this written 8 section will require 8 majlises, but we are just touching upon. But we are intending to discuss in depth. So what purpose of this corporate tax return majlis? To master every single aspect. But at present, in today's majlis, we'll try to touch upon, and in subsequent majlis, we'll deep dive. Then aspect number 2, under the revenue schedule, the above details of the revenue is important to compute a de minimis threshold. Then the second, non-qualifying revenue. Under this section, non-qualifying revenue detail to be provided as below. Mostly all these things I discussed while discussing the free zone, but for the benefit of attendee, I'm just reading it. Revenue from excluded activities. Again, what is this excluded activities? We discuss under the free zone. Revenue from non-free zone person in relation to non-qualifying activities. As we know that revenue from free zone to free zone, qualifying activities, qualifying income, revenue from free zone person where beneficial recipient is not a free zone person. So you sell to the free zone person as that goods, all services is provided to the mainland. Means the benefit is not extended to the free zone person. So non-qualifying revenue calculation you have to provide it into the relevant section. The de minimis calculation we discuss. Qualifying revenue. What is qualified revenue? Minister decision 100 and cabinet decision 100 and minister decision 260. So 13 activity plus 1, free zone to free zone. The last substance requirement, adequate substance requirement. Now this is very important. What is important? We had a long discussion as substance are detailed discussed in great detail in the free zone guide. A lot of people, they already completed their they already completed their tax period. Now they are planning to acquire the adequate substance. Please note that adequate substance required throughout the year from the day one on which your tax period is started. Suppose you are following the calendar year, then ideally on 1st January 2024, you had an adequate substance, you maintain the adequate substance throughout the year, and suppose you are not able to do that, then please note that not only 2024, coming 4 years, you will require to pay 9% corporate tax. So it is a block of 5 years. Either you are a qualified person or you are not qualified person. If you are not qualified person, for 5 years. If you are a qualified person, qualified free zone person, then every year this demonstration will require to prove that you are satisfying the conditions. So whosoever want to go for qualified free zone person, and if they were in 2024, they already missed the bus. So now they have to pay for coming 4 years, including 2024, 9% corporate tax, and then you can go for the qualified free zone person. Now, this all information will be populated based on you selected business as a free zone person. Additional detail required: EBITDA, Emirate-wide salary and wages. Now, this also we discuss detail because every aspect is very important. We were planning to touch upon the every part, but every one part, believe me, one part required 2 hours. We went through and some of the complicated return. A lot of people, after filing the 31st December 2024, they told me that it's very simple. Because we selected small business relief. If you select the small business relief, if your revenue is less than 3 million, very simple. And in fact, for 31st December 2024, not a single complicated income statement filed the corporate tax return, because all those are their tax period ended on 31st December 2024. Believe me, in 17 years, I have seen a very complicated income statement and balance sheet. As on today, we are wondering how they will be able to file the corporate tax return, because a lot of things, like one example I can give, I don't want to go into those deeper. Many balance sheets contain a personal asset used by the business and business asset used by the owners. So a lot of complications in their income statement, in their balance sheet, and you cannot allow FT to disallow everything or allow everything. So a lot of complicated existing businesses, bigger businesses, having a huge segment-wide income, lot of branches, lot of subsidiaries, lot of BVI companies. Those returns are due on 30th September 2025 because those are existing businesses following a calendar year. Their tax period just ended. Whatever we submitted return on 31st December 2024, those were smaller, new businesses came from outside, having a small, if you have just incorporated business in a last to last year, then you will not have a significant business and income. So those were straightforward returns. Existing businesses will be filing the return at 30th September 2025. And at that time, we will be seeing that how lengthy it is. This form is not simple. 8 may run into the 80 pages. So let's move to the part B. I think we will be able to complete 4. This is what we were targeting, though the slides are ready for the all 8 parts, but we will try to complete 4 parts. And balance 4 parts will be completing in the next Majlis. So election. Now, what is the election? This is not a political election. This is the elections you need to make while filing the corporate tax return. So what are those? First, whether you want to go by the historical basis or realization basis. Second, transitional rule. Third, foreign permanent establishment income. Suppose you have a P in foreign, then corporate tax provided option to opt for a exemption. Means I will not be paying any tax in the UAE. So once you select for the foreign P, then different kind of information will be populated. So here you can see how many selections you can make. Three we already talked, then small business relief. As we know that as long as your revenue is 3 million or less, you can go for small business relief. Small business relief means you will not require to pay any corporate tax. So your return will be quite simple. Maybe in 10 minutes you can file your corporate tax return. And this is the benefit given to the small business, small businesses up to the 31st December 2026. Then transfer within qualifying group. So basically saying that I am a person, I have two pockets. If I transfer from one pocket to another pocket, whether I will require to pay the capital gain tax or a business tax, no, subject to satisfying certain conditions. So this information, whatever you see, the conditions under Article 20, 26, all those conditions here you have to demonstrate that you are meeting those conditions to get relief provided by the corporate tax law. Then business restructuring relief, again merger, demergers, there are certain relief available under the corporate tax law. And once you select, and here you can see the answer, yes, no. Whosoever has not filed the return, not walk through the corporate tax return filing process, you can see how the window will be open. But here, the beauty that if you select the yes, different kind of further information. If you select the no, different kind. Foreign P income, we already discussed. So even if you are not able to read over here, you can see over here. So there are 6 elections, realization basis, option provided in the return to opt for the realization basis in respect of all asset and liabilities subject to fair valuation, impairment accounting, or all capital asset and liabilities. This is an irrevocable election to be made in first tax period. Once you decided, okay, I will go by this method, finish, then you have to continue for that particular entire block of asset for the same method. We discuss a lot on this. I will not again, since I took the oath that I will not be discussing corporate tax, but since it is a corporate tax return, I had to touch upon those provisions, but it delayed the process to complete the 8th part. Okay. The second election is the transitional rules. As we know that we have just started corporate tax from the 1st June 2023. So we are moving from the non-corporate era to law corporate tax era. So of course, certain benefit need to be given to the businesses to adjust their assets, liabilities, and income. So transitional rule, this section provide option to elect for availing transitional relief on transfer of qualifying, immovable property, financial assets and liability, intangible asset. This is again a irrevocable election to be made in a first tax period. The third, small business relief, I already spoke about this. Qualifying group relief, I already spoke about this. Business restructuring relief also. And then last is the foreign P exemption. Let's quickly complete 2 and then we'll be concluding the meeting. Majlis, please join WhatsApp group so that you can get a link from the Majlis WhatsApp group. So now the part C, the accounting schedule. This is how it looked on the Emera portal. You can see accounting schedules. So what is the accounting schedule? Nothing but a financial statement. Your income statement, comprehensive income, and balance sheet, financial position. So this is what accounting schedule, and then whatever other schedules you will require. Once you select particular information, then it will be populated that what additional information you require to provide for every account balance. So accounting schedules statement of profit and loss account, then statement of the other comprehensive income, statement of the financial position. Now, statement of financial position, asset, liabilities, and very, very important, audit. So once you selected that you have audited your books of account, if you say yes, that they will ask you whether your opinion is other than the unqualified opinion. It means if it is a qualified opinion, disclaimer, and if it is, then it may trigger a further information or a tax assessment by the FT. But while filing the return, you have to just give the information. Then the last is the capital distribution schedule. So even if you are not able to read, don't worry. Here we have already listed. Number one, statement of income. So what you require to give? Information of the profit and loss need to be provided based on the standalone financial statement. Except in case of the tax group, yes, you have to consolidate. As you know that Article 40 provides 7 conditions. If you satisfy those 7 conditions, then you can form the tax group. And in that case, irrespective of the number of entity, you will require to file one return. If you are filing one return, but obviously you will require only one financial statement. And those financial statements need to be prepared by following international financial reporting standard, whether it is a full-fledged or a SME IFRS. As we know that there are certain disclosure not required for SMEs, so there is a separate set of the IFRS for the SMEs. What is the second? Details should be provided in a specific format as outlined in corporate tax return format. So it will not be your profit and loss account drawn up by your finance manager or your auditor, but there is separately information will be asked by the corporate tax return format. Second, statement of comprehensive income, as we used to call it equity statement. So what information required? Under this section, basically detail of the income and losses subject to the income statement need to be disclosed. As we know that certain capital income, certain prior period income adjustment done through the statement of comprehensive income. We'll not go into the deep. Maybe while having a separate Majlis on this accounting schedule, we'll deep dive to understand what is required to be disclosed under this section. Okay. Statement of the financial position. Under this section, information related to asset, liability, equity need to be provided, where books are prepared based on the case basis of accounting. In such cases, only income statement need to be provided. Somebody asked me that why income statement only, why not to balance it? By the way, when you are following the case basis of accounting, the balance sheet almost become irrelevant. Then the auditor's detail. Pre-populated if revenue is more than 50 million or you have opted for the qualified freezer person. This two situation, mandatory audit. Second, nature of the opinion. As I discussed, qualified, unqualified, name of the auditor, even TRN number also of the auditor if it is available. Five, the capital distribution schedule. Under this schedule, detail of distribution of capital, addition, deletion, number of shares, etc. need to be provided. So it's a notes. Amount need to be disclosed in AED nearest to full dirham, not into the fields. Now, how you convert your USD or euro or pound financial statement? What rate? Of course, it will be a central bank rate to convert into the AED. Any adjustment to accounting balance and other than unqualified opinion may trigger further inquiry by the FTA, as we discussed. Now, this is something announcement. We have completed 4 batches of the master course on UAE Corporate Tax. We are starting 5th batch from the January dates to be announced. So this master course will be every Friday, Saturday, every day 2 hours, total of the 6 days, 12 hours. And we cover all in detail. So we walk through all the articles of the corporate tax law, 20 chapter, 70 articles, 60 pages, everything. Along with this, all the decisions, ministerial decision, cabinet decision, FTA decisions, and as much as possible, we cover the guide. So basically, this course, after 12 hours, you will be in a position to conduct any consultancy for the corporate tax, or you will be in a position where you can provide support to your client in respect of the corporate tax. Not only return filing, but for the tax planning and compliance. You can get more information on our YouTube channel. You will have a certain recording of the sessions available on YouTube channel. You have to put CA Nishant Rayma. You'll find my YouTube channel. For full session, you have to subscribe. Otherwise, clips are available. So let's quickly touch the last part, which is accounting adjustment and exempt income. You can see this is how it looked like on the Emera portal. Accounting income, transitional adjustment, exempt income. As we know, we used to talk about the shared journey from the accounting income to the taxable income. We all, whosoever has done any kind of practice anywhere, is aware that profit is reported under the income statement of the financial statement, and then you have to add certain thing, you have to deduct certain thing. Certain expenses are not allowed under the corporate tax. Certain incomes are not taxable under the corporate tax. So those need to be add back. Whatever expense is not allowed. And exempt income need to be reduced like a dividend income. And then you have to reach to the taxable income. So accounting income, add less certain thing, and you reach the taxable income, compute the corporate tax at rate of 9%. See that whether you have any certificate for a foreign tax credit at present. Going forward, you will have a withholding tax. So you will have a certificate for withholding tax in the sense that somebody already deducted your tax. You can very well take the credit of those, whether it is a foreign tax credit or a withholding tax as known TDS, tax deducted at source or tax collected at source. At present, the rate is zero in the sense it is very much within the mechanism of the corporate tax. But since rate is zero, once they will raise the bar and make it certain percentage, you will require to deduct the tax from the source and pay to the FTA, provide the certificate. Same like how you are taking the input credit. So this is what said journey. Accounting income for the tax period to be provided. Following adjustment to be made. Adjustment for the equity method of accounting. Now this is very important, very wide subject we'll be discussing while having a separate Majlis on this, because this itself requires half an hour. Adjustment for the income from unincorporated partnership treated as a separate taxable person. Adjustment for unrealized gain and losses that will not be recognized subsequently in the income statement. Now, this adjustment need to be made in your reported profit and income statement. And this all are pre-populated in the sense that it will be question will be asked by the corporate tax return portal and you have to provide the information. Once you select particular aspect, automatically question related to that aspect will appear on the tax portal. So realization basis of adjustment, the section is only enabled if opted for realization basis of accounting. If you say if you will not opt, then those questions will not come. Following adjustment to be made, unrealized gain loss to be adjusted. Any unrealized gain or loss realized during the tax period also need to be adjusted. And depreciation adjustment for unrealized gain on the asset subject to realization basis to be provided. On 31st January 2022, corporate tax was announced. We were knowing before, since we become a member, UAE become a member of the OECD, and we were knowing that corporate tax is coming. On 31st January 2022, corporate tax was announced. On 1st February 2022. Very next day, I have posed 5 questions on LinkedIn profile, on my profile. Still it is there. On next day, out of this, one question was, what will be managerial remuneration? Until now, there is no fix. Whosoever is here for, say, 1 or 2 decades, we are knowing this kind of questions. Because the government was very clear that there will not be a personal tax. Out of these 5 questions you can see on my profile on the LinkedIn, one question, very next day of the announcement of corporate tax, one question was, what will be the depreciation rate? Because we have been to the Jablali bigger businesses manufacturing and we have seen a different kind of asset, and we were wondering what sort of rate, as we know that certain jurisdictions around the globe, they have their own way of calculating depreciation. So here there is no rate, whatever depreciation you claim, but certain adjustment need to be made. We'll discuss in the particular Majlis. So let's move to the second. We are already 3 minutes late. We'll be finishing in next 7 minutes or 5 minutes. Transitional adjustment. This section is only enabled if opted for the transitional relief. Adjustment in respect of the gain on disposal of the qualifying asset or liability on prior to the first tax period. So we know that if you have some property before the first tax period, then the corporate tax has given you the transitional adjustment benefit, whereby you can go for the holding period or valuation basis. We'll be discussing in depth. Detail of qualifying asset, liability to be provided, asset and liability wise. Let's move to the fourth one, exempt income. We know that certain incomes are exempt, like dividend, domestic dividend, dividend and capital gain from the participation exemption. Participation exemption, we know that if you are you have invested, if you have a serious investment in any juridical person, at least up to 4 million or 5% of the share capital, then dividend and capital gain from such investment is exempt. Domestic dividend is exempt. So those information, once you click on the dividend income, then those aspect will open where you have to provide information. Detailed participation exemption clawback to be reported. You took the exemption, but you broke the conditions. Clawback is a situation where you claim the relief under the corporate tax, but you are not able to meet conditions subsequently, like holding period. In some of the aspects, you have 1 year, 2 year holding period of the share. And if you are not meeting those conditions, then whatever relief you claim in previous tax period will be clawback. Last, foreign fee income. This section is enabled only if opted for a foreign fee exemption. So you have a two treatment. One, make the foreign P as a regular SSC and claim for the foreign tax credit, or you can claim for the exemption, total exemption. Taxable income from the foreign P to be deducted and tax losses from foreign P to be added back. So this is also one benefit you want to go as a regular SSC, because you want to claim the losses from the foreign P, then you will not be claiming the exemption. Once opted for foreign P exemption, such treatment to be applied for all P that are satisfy the condition during the tax period. So you cannot do the cherry pick that this P I want exemption, this P I no. Then you have to opt for all the P's. So this way we completed the part 4. Then relief will be covering next. Other adjustment, tax liability and tax credit. G, then the H, review and declaration. This will be covering schedules, as many as 20 schedules, and the most important is the transfer pricing disclosure form. We have a lot of we know that a lot of disclosure required in respect of the related party as provided under Article 35. Read with transfer pricing guidance guide, and the Article 36 connected person. A lot of information required, and there is a specific form when you are not crossing the 200 million, yet you have to provide a certain information. You have to perform the KYC, KYR, KYC, know your connected person, KYR, know your related party, because whatever definition you have for the related party is IAS 24, related party under Article 35 altogether different than what was up to now reported under ISA 24 related party. All those due to related parties need to be disclosed separately. Some of the related parties you never thought those will be a related party, like fourth level of kinship. If they have a businesses, those become your related party. They were never a related party under ISA 24. So that is why you need to perform the KYR, know your related party, KYC, know your connected person. A lot of people, even your director, your officer may become a connected person. And once it is a related party or connected person, then you have to comply with the Article 34, which is arm's length, which is fair market value. Then you have to do the functional analysis, benchmarking as may require under the corporate tax law. So if you are you are crossing 200, then maybe local file, master file. If you are a MNE, then master file also require certain other documents required under the transfer pricing regulation. So this we will be discussing in the next Majlis on 10th January 2025. This is the threshold with the reference. You may take a screenshot. This is very ready. But like this, we have a lot of chart, lot of handy. This you can take the copy, you can keep on your desk all the time. You can understand what is the basic exemption, then specifically the IFRS for SME 50 million. Even you can see the decision reference, which decision this is provided. So this become a ready-made like this. We have compiled many tables for a quick in last 2 years, which we are covering under our master course. During the Majlis also, as and when required, I will be sharing all those informations. You can take the screenshot and you can keep with you. Thank you so much for joining Corporate Tax Majlis. Please subscribe to our YouTube channel so that you can watch our recording. Plus, make sure that you join on 10th January, second meeting, second day of the corporate tax return.
Like and subscribe so you do not miss our next video on the corporate tax.